Welcome to OmniTalk, powered by Nextsoft. I'm your host, Amy Rice, and OmniTalk is a podcast focusing on fintech and how it affects banks and credit unions. Today is the second episode in a two-part series with the founder and CEO of Cadence, Nelson Chu. Nelson will be talking about disruptors within the financial industry, what fintech trends will be emerging in the future, and the digital online lending marketplace. Which specific sectors or applications do you believe fintech firms offer that have the greatest potential to have material influence or true disruptive industry impact?
Well, here's the interesting part, right? It's actually every part of financial services can be disrupted for the better with fintech companies. And so you've seen it in things that are not necessarily fintech per se, like KYC AML. You've seen it with payments, obviously. You've seen it with savings accounts, like all these little niches that's one startup somewhere wants to go out and own is just generally great for the entire financial services sector as a whole. So you can expect that there's going to be something out there created for somebody somewhere. And so across all financial services, and it'll be a very, very positive thing for the industry as a whole. You're going to see, I think, banking, traditional banks start to buy up all these various different services or microservices that are features, not necessarily products or companies in their own right. And that'll be good for them to be able to add that to their repertoire and their arsenal. At the end of the day, I think the bigger banks need a little bit more competition. I think they're a little too big for their own good. And so it will take some time for a startup to be able to reach that scale, but I wouldn't discount it given the amount of money that's being thrown around to, like we talked about, the new banks that are coming up. If it reaches the point where they can get the licenses that they need to grow, if they have the ability to either acquire or merge with all these various different other startups in the financial services industry that are solving for different pain points, you have the opportunity to create a really powerful experience end-to-end for banking through the various different startups that are solving these different problems that I think will be pretty game-changing across the board for everybody involved.
How can financial institutions thrive in the age of digital disruption?
So I think they need to be a little bit more nimble on their feet. They have shown bits and pieces of that. I think certain companies are definitely more nimble than others. I mean, you saw Visa bought Plaid for a monumental transaction. That's the stuff that you like to see, right? These are old incumbents that have made their money off of fees and various different ways of doing things that are just not really relevant anymore, or at least not very viewed very favorably upon. At least for Visa, it's more behind the scenes. With traditional banking, they charge fees left and right, and that's really how they make their money. And so when you see all of this stuff start to happen, I think there is a tremendous opportunity here for the incumbents to start to realize that the startups can help them. They're not here to hurt them necessarily, and it will lead to a outcome where the startups and the founders themselves do very well for themselves, and they're happy with that type of return and that exit. And you also see the banks and the incumbents and the big financial services firms themselves benefit from the innovation that they really can't do themselves. I mean, they're very much a monolithic and very slow-moving enterprise. So the startups themselves have the ability to dramatically change the internal culture, and not just that, but the actual output and the experience that these banks can provide. So all in all, it's for the better, but they need to be able to recognize that they are part of the problem. They need to be able to recognize that there is other solutions that are better. And at the end of the day, they need to realize that sometimes it's better to buy than to build, most likely.
What fintech trend emerged this year that wasn't on your radar in previous years?
So I think probably the one that was most interesting was the rise of the retail investor, which was actually quite a bit of a shock. So you had everyone stuck at home and quarantining in place or sheltering in place. They got a stimulus check from the government, and they had so much time on their hands, and there was no sports going on. And so never in my wildest dreams could I have imagined that the Robin Hood army, if you will, would go out there and start to move the markets in a not insignificant way, in the sense that they were buying, some of these near bankrupt companies and helping them skyrocket in price. And it was interesting and fascinating to watch. Did not expect that because, as you know, I mean, obviously market makers and bigger institutions are the ones who traditionally are able to move the markets and move stocks and bonds one way or the other. retail really doesn't play much of a part. And so to see that happen was pretty impressive. At the same time, also pretty scary, because I don't think the average retail investor also even understands what they're investing into. So that in of itself was interesting, perplexing, but a little bit concerning nonetheless.
What are your thoughts on the digital online lending marketplace? What do you think about its prevalence, and do you think that it'll start becoming more mainstream?
Yeah, so it's grown a lot, right? So the concept of private credit, which is effectively digital lending, that has been the fastest growing asset class in all of private capital markets. And so it's at I think, $1 trillion size right now, and it's still growing. A lot of that growth happened as part of the global financial crisis. The banks stepped back from lending, and they started to kind of hunker down and basically hold on to preserve capital, except for only the best of the best in terms of credit quality. That led to a bunch of different upstarts, financial services, fintech startups that came in and filled that gap. And when you see what happened as a result of the COVID crisis, obviously banks are paring back yet again. Now the digital lenders are coming through to save the day. So it's going to be a consistent theme, I think. It really is going to be the new normal. And I do believe that banks are really going to start stepping back from this at an even more serious scale, to the point where you'll have a lot of startups that can come in and effectively do what the banks used to do in a much more efficient way. And to what we talked about earlier, there's a chance that these lenders end up getting acquired as a result, simply because they are doing things that the banks couldn't do before through data, through underwriting, through efficiencies, through technology, all those things that the banks aspire to and want. These startups oftentimes can do it in spades based on the size that they're at and the scale that they're at. And that's something that they can bring to the banks as well. So I'd like to see and like to think that digital lending is here to stay. It's only going to continue to grow, and it will reach a point where it becomes pretty normal that you don't necessarily want to get a loan from a Chase or a Bank of America because it's faster, cheaper to go elsewhere, and you have the ability to shop around.
What is your opinion on AWS or cloud-hosted solutions, and how can moving to the cloud benefit financial institutions?
Yeah, I think the cloud itself is one of the greatest innovations, I think, in the last probably couple decades when it comes to, it's one of the huge advancements of the internet for all intents and purposes. And it came through as a result of just higher throughput, our ability to, have access to more data at a higher rate of speed has allowed all of this to prevail. So it's something that I would argue every next generation enterprise needs to adopt at this point. If they haven't adopted it, they are a little bit behind the curve here, but there's a lot of reasons why you want to stick to on-prem, and it's actually very important, given that's the way things have been done. That's the way that you feel like you have the most control. Totally understand that, but at the same time, it leads to so much more risk, right? So you're at a situation where if there is downtime, if there is anything that happens in your premises, you can't actually just flip a switch and turn it on somewhere else. It's just simply not that easy. And so the ability for cloud infrastructure and architecture to be able to hop around, bounce around, and be able to kind of spread out that risk is actually critically important towards just business continuity as a whole. Beyond that, the ability to pull in and use more processing power and data and all that stuff on an as needed basis versus constantly paying for it and constantly buying more servers and racks and turning them on, turning them off, things like that. It's just a lot more efficient. So there are definitely ways to bring the cloud into a more legacy enterprise that, without a doubt, I mean, you can look at how JP Morgan, Goldman Sachs, and other banks have done it, because a lot of them are shifting to things like AWS and Azure as well. But it takes I would say, a little dip of the toe in the water before they really fully commit, and you start to decouple it one by one. And so they started with little pilots here and there for specific services that they could either run in parallel, or they could just fully trust that this part of being in the cloud is totally okay. And then as they saw the success of that, they started to bring on board more and more parts of business into the cloud. So it's by no means a one and done situation. I would definitely recommend trying it out first and seeing how it goes before fully committing. But there are easy ways to take apart and decouple the business, and where the risk is very low, just to try it out and see how much value add you as a company would get out of it. But I'm fairly certain the value add is pretty high, all things considered, especially since all these major non-fintech company or non-banking companies have adopted it, and it's now their go-to effectively.
Nelson, I want to thank you for sharing your knowledge and experience with our listeners. It was a pleasure having you on.
Absolutely. Thank you, Amy. Thanks for having me. It was great. And yeah, let me know if we can be of any help in the future. Always looking to do what we can.
To learn more about Cadence, visit www.withcadence.io. This episode of OmniTalk was sponsored by Nextsoft. Nextsoft is your all-in-one stop to help your company secure, connect, and optimize your data. Welcome to Data Done Right. Thanks for listening to OmniTalk. As always, stay safe and stay well.